All of traders don't make money because they are chasing price. In this video, I'll show you why I use limit orders and how they allow me to enter trades calmly without chasing the market. Did you ever enter a trade while the market was already moving out of emotional triggers and jumped in too late? And that trade did not work out great? Keep watching. I'll explain exactly how to prevent this. In the previous episodes, we talked about breakup structure, fair value gaps, premium and discounts. All these things tell you where we should trade. Now the next question is, how do we enter a trade? This is exactly what we're going to talk about. The problem with market orders. So a trader that starts out most of the times uses market orders. That means that they click buy or sell immediately when they see a setup or before even they see a setup. The not right action that they take, that is the price often moves already fast moving away from it. So what is the not correct thing that they do? They enter too late. The stop loss becomes bigger than they actually wanted. The risk becomes less accurate, and emotionally they feel pressure and they are not calm when they are entering a trade. And this is very normal for starters. How can you fix this? I prefer to fix it with a limit order. So what is a limit order exactly? A limit order lets you set your price before the price is hit that price. What do I mean? Say that we want to enter a trade at 24,000. We can set the limit order at that number before the price reaches that level. If it is short or long, it doesn't matter. What is better for it? Instead of chasing price, you let the price on the market come to you. This fits perfectly with the concept we are learning earlier. Because if you have a breakup structure together with a fair value gap, and the fair value gap comes in premium or in a discount, it depends on what the market is headed to, you already know where you should take an entry. So you simply set that limit order and you're done. That makes it easy. Why I also prefer limit orders. There are three main reasons why I prefer limit orders. The first one is they remove emotions. Because you already decided when the market was moving in a certain direction where that entry should be. You are not reacting to price. You're reacting exactly to a plan. What's very important in trading, because if you have a strict plan to it, you can implement it and be done with it. Second of all, they improve your risk because you enter closer to the ideal price that you want to have it. That means a smaller stop loss and bigger risk to reward. Third reason is they keep your trading calm. Professional trading is not about reacting quickly, it's about preparing correctly. And I mean with this that you have to be following a structured plan, and that plan is now being presented in the full structure what we have here. So go and watch every movie so that you actually learn this strategy. It's an easy one to follow, but if you combine everything together, you make it. The example. Imagine that the market does a breakup structure to the upside first. Afterwards, we form a 15-minute fair value gap. We have a huge move upward and we have a 15-minute fair value gap laying in discount area. The price moves away quickly. Many traders would respond to the movement and say we are heading immediately to our liquidity on a higher time frame. Now, I do not enter that trade. I mark my fair value gap I look if it's in premium and discount, if it is in the right one. We look for a limit order inside that place. Then we look how far our stop loss is from the last movement up from the breakout structure. When price returns to the limit order, we can enter. If it does not return, that simply means that we did not take a trade. And you have to be fine with it. It's okay to not take a trade a day, because there will be a new opportunity every day. One rule that you have to remember, if you're working with a retest, it does not always happen. Sometimes you have a trade, sometimes you don't. Just be okay with it and let go of it. Remember this, the market has been here before we started trading, and the market will be here after we stopped with trading. Another important rule that you definitely have to remember is, if we did not take a trade and we missed our entry, be okay with it. Don't go chase that trade. Be patient until the market comes back and creates a new fair value gap, a new break of structure, and then gets that return. Professional traders understand that patience is a key part of trading. You don't need to catch every move. You only need to execute your trading plan correctly. If you keep doing that, you'll make it. To go over today's market, and we're just going to follow what the market shows us. The market shows downwards movement. We can see the market is moving to a certain direction. So what do? We made a break of structure to the downside, small retest, and we made a new break of structure to the downside. So this was a break of structure to the downside. If we have a break of structure to the downside, we can take our FIB2 from the top part to the lower part. Anything above 50% with a 15-minute fair value gap inside shows us that the market should react fast off of it. This is that 15-minute fair value gap that you can take, or you could have taken this one. I would prefer to take the highest one that you have, because you have a better entry. We have one more up here that you could have taken, that you can take too. It's up to you which one you take and if you're ready for those stops. So this is an 80-point stop. If we would have taken this short, we could have entered immediately on the tap of the fair value gap, stops at the high, targeting at least the low again. Because if we continue in the movement that the market is making, we should make a new break of structure to the downside. This is full TP or first TP at least, and you would have made a 1.6 R. Once the market is moving rapidly away from your entry, you can put your stop actually at the top swing and let it go down. This is how you actually use it. So we need premium and discount. So if you're shorting, it should come in a premium area, then to go to a discounted area again. How do you set that limit order? You set that limit order on that 15-minute fair value gap. If you set a limit order right here, you should not have been patient, or you should not have chased the market. The market was moving already rapidly down. We had patience, the market came back up and then started moving in one direction. If you still have problems with execution and how everything works, you can still work with me one-on-one, and I will mentor you until you get profitable. It's about a 12-week program where you work with me one-on-one, and I show you the way, the steps, and how everything works. Look in the description and you will find a link to it. Remember, structure gives you direction. For value gap, gives you a setup. Premium discounts gives you value. Limit order allows you to execute calmly without emotions. In the next episode, I'll show you how to place your stop loss using my rules so that the risk stays consistent and in control.